That's a great question. So I think right now, in the introduction, you talked about tariffs. I feel we're at almost a crossroads right now. What I would love to see the administration pivot to is what we've been calling national production for national security. Bessent earlier this week was on Bloomberg TV. He didn't quite say it exactly that same way, but he's talking about that. And to me, this is really investing and building out the things that we need to be competitive and to be safe as a nation. So I would say chips are included in that. Certain pharmaceuticals are included in that. Rare earths and critical minerals, not so much the rare earths and critical minerals themselves, but the processed and refined versions of that.
Right.
So that's what I'd love to see. I think it was 2 weeks ago now that the Department of Defense invested money directly into MP as the ticker symbol. They also provided $1.1 billion of debt financing. So those are the things I would like to see the administration pivot to. I think we put up a lot of regulation to get on our own way in the past 20 years. We had the luxury of doing that where we were the sole superpower. I think this is something that should be reinvestigated. Do all these regulations make sense given the current economic conditions, this competition with China? I think that's something Trump would be great at doing. The scary part is we seem to be heading to elevated tariffs. We're hearing about deals with Japan, 15%. There's been chatter Europe might get 15%. So I think the market kind of thought 10% was maybe a worst case and maybe countries would come in with better deals. And I'm a little bit worried that two things are going on in tariffs. We're seeing the benefits initially, which we're getting the tariff revenue, which is actually helping with the deficit. And we're not getting this inflation, or you have to look very closely for the inflationary aspects. If you look at things like food and vegetables, no inflation there. Canned food and vegetables, inflation because of the price of the can. But the reality is, my view is always going to be, it's going to take 6 months or so for the inflation to work its way through the system, right? You have to get the orders that come in. They have to have the inflation. You're going to spend time negotiating with your exporter. Hey, we need a price cut. You're going to bear some of this. And uncertainty also means that no one wants to do much while there's so much uncertainty, whether it's going to be 10%, 20%, or 0. So all the people are kind of doing a victory lap saying, hey, inflation, tariffs worked. Everyone was wrong. I think they're going to be proven to be incorrect, that if we go down this path, we start adding 15%, tariffs across the board, some individual things higher, we're going to see a slowdown in the economy. And I already think the economy's been a bit weak away from the data centers. And more what I'm being told, and this is really resonating with me, is hiring for people recently graduating college, or if you're in college or prospects getting out of college, all of a sudden look very dim, because that seems to be the area companies are saying, well, that we can try and replace with AI. We can try and replace entry-level accounting with AI. We don't need 4 analysts doing pitch books. We only need 1. So I'm a little bit worried the state of the economy has not been great, and that's going to get worse. And I think financial markets have got ahead of themselves, especially if tariffs come through.
Okay, great jumping off point. Thank you. And actually, I think I'd probably like to dig into almost every single one of those topics with you. Let me just make sure on tariffs I understood, because it sounds like there may be kind of 2 lag effects to tariffs that you were mentioning. One is that you think the inflationary impact of the tariffs might not materialize for, I think you said, like another 6 to 8 months. You're nodding. Okay, great. And then the other one was something you mentioned, I think I heard, which I've raised this question before too, which is, once the world realized that Trump was serious about these big new tariffs, a lot of CapEx stopped, right? As folks wait, as corporate decision makers waited for greater uncertainty. Now we're starting to get more certainty, but it's kind of dribbling out in dribs and drabs. And to your point, it's probably probably not going to get back into full gear, until we have more of these deals struck in the future, right? So there is economic activity that would have happened that has not been happening over recent months, and probably a few more months to come at least. So presumably there's going to be a lag effect from that at some point that we're going to see in the economy, right? That whatever the economy was doing organically, there's going to be some less growth in a quarter or two because we're not investing for it right now. True?
Yeah, I think that's very true. And I would say the economy's been saved a little bit because, not saved, I don't think it's going to be a disaster, but it's been helped along. Companies have been reluctant to hire people, certainly with the uncertainty. So far, I think they've been fairly reluctant to fire people. COVID's too fresh in everyone's mind where they couldn't get employees back if it turned out good. So I think we've seen a delayed response in terms of firing because they were worried if I need to hire them back. And if the situation looks like, well, we can release people, we'll see that. And what concerns me most of all, and this is a bit anecdotal, so it's always a bit scary when you start talking anecdotal, but the large corporations, I think, were pretty well prepared for this, right? They were able to put in huge orders. They were able to shift production over. They had the working capital to do it. Everything I'm hearing is the small and mid-sized companies are bearing the brunt of this. They have very limited strings they can pull. Their order size isn't big enough, so they can't go and convince someone in Vietnam to make their orders right away, especially if they're in line behind a Walmart or someone else who has the capacity to be business changing. So I think, and small and business doesn't get picked up as quickly in the headline data, I don't think, right? A lot of the data, if you look at the NFP data, non-farm payroll, it's the establishment survey. So I think there's an underlying weakness in the economy that's a little bit hidden because the large corporations were able to deal with this very well, while the small corporations were able to deal with it less well. And the other factor that so far has been helping a lot is what we've been calling tariff mitigation. So on top of what we were already saying, where you already have long-term contracts, so things aren't going to come into place, there's two main types of tariff mitigation that we're seeing is, I'll make it very simplistic, and obviously it's probably too simplistic, but is what we call, allocation. So maybe someone was importing 3 parts from China into Vietnam, making 2 parts in Vietnam, and then assembling the whole thing and selling it to the US for $5 and saying, well, it was $6 of China, $3 of China, $4 of or $2 of Vietnam, so 40-60. Now they're kind of coming up and saying, actually, it's 80% Vietnam. The parts were easy to, that was not the value, it was all the assembly. So that mitigates the tariffs by region. And the other part is you're seeing a huge spike in things that are being labeled compliant with the USMCA. There is an actual process to go through USMCA, so the, Canada, Mexico, American Free Trade Agreement. You could always get yourself labeled that, but very few people bothered because there was no benefit. Now that there's a benefit, people are going through the process. So tariffs all these things are mitigating it, but I think it's pushing it down the road. And that to me is why I think we're going to start seeing economic weakness show up a little bit in the data. And it's going to become a little bit problematic in the second half of this year. Yeah, I think you're spot on. And it's quite even frustrating. I went through at a big bank, the GFC, and the great financial crisis, everyone talked about was the big banks that got us in trouble, et cetera. And all the rules since then have done nothing but make the big banks bigger, right? There's been consolidation, and it feels like every time the government wants to get involved, and they're doing policy at such broad strokes, even if their intention, I think, is to help small and mid-sized businesses, they don't have the working capital. With interest rates, I do think interest rates are too high, so we can talk about that separately, but that's impacting the cost of capital of these smaller companies. So they seem to bear the brunt, and every step we take just always seems to push the wealth going into more and more concentrated hands. You look at the S&P 500, right? We're at record concentration in terms of how few companies dominate the market cap, and that to me, I guess, is where maybe problematic might be too strong, but that kind of that's the bread and butter of this economy is those small and mid-sized businesses, and I feel that they are struggling and they're not being heard right now.